Good morning, good afternoon, good evening, wherever you're located on the planet Earth. It's time for another PulseWave report with yours truly, the Algo Capitalist, aka the Vulcan, coming to you live from PulseWaveTrading.com, home of the world famous PulseWave Price Trigger reports. Yes, yes, yes. I've been in this lab, cutting it up, man, getting ready, because it's going to be firecrackers and cherry bombs in these markets. Imminent. Imminent. That's right. Imminent firecrackers and cherry bombs, dynamite sticks, even possibly some C4. But it's about to be on and popping. And you don't want to miss it. You want to be on the right side of history. You want to be on the right side of these markets. And what better way to do that than to have access to the PulseWave price trigger reports so that you know ahead of time where is the intraday price inflection points going to occur. You want to know where. You want to know where. And you want to know when. And that is exactly what the PulseWave price triggers will do. So there has been a lot of talk across the aisle in these markets. Some people calling for an epic crash in the equity market. Some people saying, no, the rally has only just begun. Other people are saying that the crypto markets like Bitcoin and the altcoins are going to crash and burn. Other people are saying, no, Bitcoin's going to $4 million and the altcoins are going right along with it. So that's the question. That is the real question. Dun, 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 right? Where do we go from here? Is oil about to take off to new heights? Well, as you know, there's been a lot of chatter. I told you, a lot of saber rattling. There's a lot of World War III things going on behind the scenes. You won't find and hear about that on U.S. mainstream channels, but you will with the overseas channels. Absolutely. They breaking it down. They're showing you exactly what's going on. Why they keep you ignorant, or should I say ignorant, here in the States. They're keeping you ignorant. You don't know what's going on. You don't. Take an example here of soybeans. Okay, so we are now approaching emergency levels here in this soybeans. I'm going to have to start taking notice and start looking for opportunities to partake in this. Soybeans are up 32.25 points this morning. Back in the day when I first started, that's well beyond lock limit up. They have since stretched those lock limits and changed them. It used to be like, was it 30 cents, 20 cents, something like that? 20. It's not anymore. Not anymore. Nope, 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 nope. It's like 70 or something now. But either way, 31.5 points, 32 points. That's a whopper for soybeans. How about corn up 17? How about wheat up 24.25? Ladies and gentlemen, there is a food crisis going on here that nobody's talking about. I'm so sorry. When you see grains on fire moving like Bitcoin, I think there's a problem. We need to address it. We need to see what's really going on behind the scenes. What are they keeping from us? What are they hiding from us? We need to know. We sure enough do. We need to know what's going on. All right. So I'm proposing that this morning that we take a look, a little dive deeper behind the mask. I don't think the American people are the only thing walking around here with a mask. I think the mainstream media is also wearing one and keeping the American people ignorant to what's going on here. For instance, soybeans is in a mature bull market, and we're locked in even on the momentum side. And that is a question. That's questionable. But on the other hand, with wheat, we had a crash alert coming into today. That's right, a crash alert sell signal. The market gave no downside production whatsoever, excuse me, and decided to go the opposite way. It moved the opposite way. Now, here's the thing, though. We're in the Kumo cloud on the algo charts in wheat. That's right, wheat is in the Kumo cloud on the algo charts, okay? So when you're in that state, you know what happens. All types of flip-flopping and moving around. So we see that happening right now today. All right, so this is also something to take note of. Now, we are in the Kumo cloud on the algo charts in wheat, but then we get this breakout to the upside this morning as the intraday price inflection points are tripped. Okay. On corn, we also have a mixed picture because we are in a bull market there, but we've been in a pullback status. So we had some negative momentum coming into today on corn. All right, and that should be noted because according to what we have this morning on corn, corn did not trip the intraday price inflection points on the sell side. Instead, it tripped on the buy side. So this morning we have a breakout in corn, but we have to put it in perspective. It's not as powerful as its brethren, soybeans and wheat, but still a breakout topside nonetheless. So have we seen a short-term bottom in both corn and wheat at this point? That is the question. And what's up with these beans? These beans are really, really stretching right here. So we have to start taking notice, standing up and taking notice to what's going on in some of these markets. We can't ignore it because it's telling us and giving us clues about what's happening. Another case in point is oil. Oil is in a mature bull market, had bullish momentum coming into today. And yes, intraday price inflection point tripped, but not by a lot. And then it quickly reversed. All right, now we're at the lows of the session in your crude oil futures. Okay, so this one is most likely going to end up generating, possibly, depends on when we close, but it could generate a sell signal as early as for tonight's trading. So we're watching to see how it trades the rest of the day, where it closes. Excuse me. All that's going to be important over these next couple of days. Now, I know we got government reports coming out Thursday, so we're anticipating not too much going on as far as, news. The reports will start picking up Thursday and Friday, but for right now, this is where we are. So we have to take note of where we are. Not really seeing, like I said, a lot popping off. So we have to ask ourselves the question, what's really going on? Is this just regular trading, or is there something else brewing here? And I have to admit, oil just came up out of the Kumo cloud on the algo charts, where it was oscillating up and down every day. And then now it's finally looking like it's found its footing. So we take all these things into account when we're looking at how this market's been trading, what it's been doing on the charts. And I have to say, it was very interesting trading along the way to get us to where we are today. So I've taken note of all of this, and as of right now, it looks to be a little stretched on this breakout. This could be a false breakout. All right, and I'm well aware of that. This could be false. We still have that short-term top in place, and I think the market's just trying to get back up and test that zone If the market fails here, though, however, I think the reversal second time around would be a little bit deeper as far as in a corrective state. That's kind of what I'm seeing here. Just looking forward, looking ahead in oil. I think that's where we're going. So if it doesn't take out the previous highs on this particular run that it's on now, and if it exhausts itself, I think that's going to be a wrap, and we may have seen the highs, at least for now. But we can't discount this, the summer driver season, even though this is a COVID world we're in. I think the market does have the potential to make up for last year. So we could push well into the $70 handle on this crude oil if it's able to take out the highs, which I think it might be able to. I really do. I think that is a strong possibility over the next 72 hours. All right, so there's something to keep ahead. I don't think we'll see too much action right now at this point until the reports later this week. I think once those reports are out the way, that would open the door for the remainder of the markets to make their move and do what they're going to do. So once again, that's just what I'm looking at right now. It's nice to see that Bitcoin is trying to bounce and oscillate as well. Struggling here, though, so that is noted. It's definitely struggling, but it is oscillating off of the intraday price inflection point on the sell side. So even though you have a little bit of recovery, you still have signs of weakness. But here's the interesting thing. Coming into it this morning, we did have a rally alert from last night, right, in the Bitcoin. So we're looking for some action there. And the truth of the matter is we didn't get it. We haven't gotten it. We haven't gotten it. So we're not ignorant of that either. We're watching. I think that we're going to bounce around here maybe for another day or two, but the bearish pointer is where I'm concerned, where the market spiked down and then rally right back up, where it spiked down below the 51,600, and then only to come back and to 55. So that is a 4,000 point like snap. I mean, it literally dropped all the way down there and then just snapped right back. It didn't even stay there. So, excuse me. When you see something like that, it normally means also that the bulls are very committed to this particular market. So the bulls do seem committed to the Bitcoin. So any pullback, if we get significant pullbacks, I see them having a strong potential to be bid right back up again. So those who missed this particular move will probably do well to position themselves to get back along the market, or even long for the first time if they missed the initial thrust. So this is something to look at as well. It will be a little tricky though, because Bitcoin has extreme volatility more than any of the other coins. So you got to look at that. You got to look at that. You got to say, okay, what's really going on here? And then you have to position yourself based on that information. And you have to be prepared to understand that the stops that you're going to be using are going to be quite wide, all right, in comparison to other altcoins, okay, because Bitcoin is so expensive. So obviously it's going to have wider price fluctuations from a day-to-day standpoint. So you have to be prepared for that. Where do you put your stop if you get long? Where do you put your stop if you get short? You have to allow for all of this. Now, the markets do self-correct, all right? if you find yourself getting chopped up, 3 trades in a row, that means that the market is trying to work itself out. So you don't lose heart. You keep grinding at it, but just don't go hard. You want to build a position that you can add to. You don't want to go all in, on the first try, the first entry. What do I mean when I say what kind of chart pattern am I talking about? We're talking about when the market's not trending. All right. You can be in the midst of a bull trend and then have one day where it's off. All right. And you have to account for that. What do I mean? Okay. So in a bull market, all right, you are riding that trend until it stops, until a top is put in, whether it's a short-term top or a longer-term top. You won't know a longer-term top until time goes by, but on the short-term top, once that's put in, that's what you watch for. Okay, does that mean we're going to pull back? Excuse me. And if we pull back, does that mean it's going to turn into a broader correction? You have to ask yourself those questions. Then you have to look and see, okay, if we unlock from the trend, if we're no longer trending, we're no longer in a corrective state, is this a sign that the trend is about to shift? Are we going from bullish to bearish or bearish to bullish? And if so, what technique should I be using? What entry schematic fits that criteria? All right, that's what you have to go through with yourself. You got to ask yourself those questions. How do I approach this particular market? Am I going to be on the sidelines? Is the market going to sideline me? What do I do? And so all those questions can be answered in the PulseWave report because it looks at all of that. During times of the sideways consolidated market action, whether it's consolidating north of the Kumo cloud or south of the Kumo cloud or inside the Kumo cloud, any type of consolidation that is occurring, it will require a shift in your trading because there's a shift in momentum. So technically speaking, any consolidated sideways market action is an algo shift. All right, it's a shift in momentum. Momentum was bullish if it was a bull market, but no longer trending bullish because the market itself corrected itself. And now it's just moving sideways. So there's a new, different type of a approach to that type of market. When the market's moving sideways, there's a different way that you have to trade it. All right, versus when the market is trending. Okay, so like I said, whether you're in the Kumo cloud or outside of the Kumo cloud, consolidations can occur either in the cloud, above the cloud, or below the cloud. Okay, doesn't matter. A consolidation is a consolidation. A sideways pattern it is what it is. All right, you're going to get a lot more trading signals in that environment. In a consolidated market environment, you're going to get mad trading signals. They may flip-flop every day. You may have a buy today, a sell tomorrow. You may have both a buy and a sell today. I mean, it just varies from day to day until the market has adjusted itself. Once the market has readjusted itself, then it locks back into a trending pattern. And we don't know if that's going to be a bearish trending pattern or a bullish trending pattern. But nevertheless, once that pattern emerges and shows itself, then that's when you lock in with that pattern. Because at the end of the day, we are trend followers. We like to trade the trends. But now in today's market environment, those trends are no longer limited to both daily and weekly charts. These trends show themselves now intraday as well as maybe 1 day, 2 days, 3 days, maybe even 5 days. And then that's it. The trend disappears. You go back into consolidation until the market decides which way it wants to go next time. There are also false breakouts where the market will look like it's falling apart and then quickly reverse you, and we call that a bear trap. Or the market looks like it's rallying, it's going bananas, and then right at the around lunchtime in the middle of the day, the market reverses itself and says, psych, we call that a bull trap. So during consolidated periods, you will have many bull and bear traps in addition to that. So what some people decide to do, if you're a PulseWave subscriber, which what many will do, you guys can attest to this. You'll say, okay, the daily buy and sell signals are a little bit too volatile for me right now because we're consolidated. I'm going to stick to the weekly. All right. That is a viable strategy for you. And the reason that you would entertain doing so is because the weeklies also will readjust, okay, to that prevailing market condition. So in a sideways market, what you will find is if you, for whatever reason, you can't really sit and watch the market, or whatever the reason, whatever the rationale, whatever the issue, you may say, I need something a little bit slower, something a little bit more smoother. Let me just rely on the weekly weekly price triggers. That will be what most people do. I know a lot of people work or whatever, and you just can't be at your computer, or you just can't be on your smartphone, checking it like that. So you'll go with the weekly. Here's the advantages and disadvantages during a consolidated market using both daily and weekly price triggers. Okay, so pros for using the daily price triggers during a consolidated market environment. One of the pro features is that by doing that, it allows you to get involved in some day trading aspects. So you have a shorter time horizon, all right, and you're always looking to be flat at the end of the day. So by using daily price triggers in a consolidated market, you're basically day trading. You're looking to get flat at the close. You're not looking to hold anything overnight. You're just looking to get flat at the close. And then you wait for the next report to come out, and then you'll take that next signal. Or if you don't get flat, you'll hold the position until the report comes out. And if you need to reverse, you'll just go ahead and reverse at that time. Me primarily, that's what I do mostly. What I'll do, I'll wait until the next report is out, and then I'll make my decision there. But if I see a good enough gain, and we get close to the close, I'll just go ahead and I'll book my profits, and then I'll just wait for the report. So it's really up to you. I love booking profits. And you've always heard me say you will never go broke taking profits. I'm a profit booker. I will book my profits when I see them. That's just how I do. Especially if I know I'm going to be busy in the lab, or I got other things to do and I can't just sit and watch. So that's what I'll do. All right. So that's one of the pros in using daily price triggers during a consolidated market. Another pro by using that is not just a shorter time horizon and you're trading on a quicker time frame, but you have a little bit more nimbleness to your trading. So you're in a better position to take advantage of things that may occur throughout the trading session. So let's say you are on the right side of the market. Let's say it's a sell day. You're short something. Some news can come out and say, something negative, and then it will exacerbate your short. So where you would have made about maybe 30 points short in the S&P that day, you may walk away with 80 points, right? So that is another pro when you're using the daily price triggers to trade a consolidated market environment. What are some of the cons? Well, some of the cons in trading using the daily price triggers and while you're trading in a consolidated market environment is that you have to pretty much be available to watch and monitor your position. All right, so you're going to need to be able to watch it, to monitor it, check on it. Yes, we always use stops when we're trading, so that's not the issue. The issue is being able to watch it, because what if there is a take profit point? All right, so you want to go ahead and you may want to make a trading decision. Okay, I'm up $300 in this trade on the day. Okay, I'm good. For me, typically, if I'm up let's say $350, something like that. All right, I may make a decision to pull the trade and just book the profit, because on average, on a consolidated market, the trends don't last more than a day. Most of the time, they do not last more than a day. You're buying and selling, flip-flopping every day. All right, so if I'm up, I'll give it a range between $250 to $350 on a trade, and we're in a consolidated market, I may go ahead and book it, especially if it doesn't look like anything's really happening. Not too much is happening. The market's just kind of like hanging around. I'll go ahead and book it. No harm, no foul. Of course, you may have one of the downside. Another downside is you may leave money on the table, but you always leave money on the table when you trade. Never forget that. You're never going to catch the absolute bottom or the absolute top in a market consistently. All right. I didn't say you'll never catch it. You will at times be able to sell at the high and buy at the exact low. Those times will happen for you, but those are very few and far between. Those are very rare moments. They are repeatable, but they are rare. Okay, you got to remember that. You won't consistently be able to do that every day. I don't know anyone who can do that every day. All right, that's a big task. All right, so that's one of the cons. You got to be there. You got to be available when you're trading. You're taking a more of an active approach using the daily price triggers during a consolidated market environment. Let's talk about the pros for switching to the weekly price trigger during a consolidated market environment. One of the pros there is that obviously you don't have to babysit the market. You don't have to be available. All right, you can place your orders and you can go about your business. The market will take care of the rest for you. All right, so that's a big plus. That's a huge plus. Another plus for using the weekly strategy during a consolidated market environment versus the daily is because with the weekly, chances are if that intraday price inflection point reaches the weekly price trigger, that's pretty much going to be the direction the market's going. 9 times out of 10, you're going to be on the right side of the market, and now you are catching the beginning of the move. You're right there at the beginning of the move. So that's what that affords you. That's a huge plus switching from daily to weekly. All right. Less volatility, less fluctuation when you're using the weekly versus the daily in a consolidated market. All right. One of the cons would be having to wait. That's the biggest con, is having to wait. You switch to the weekly, you're waiting. Also, while switching to the weekly, in case the market stretches a little bit longer than it needs to as far as moving sideways, it becomes more of an elongated sideways pattern, then you're setting. You're in your hands, right? But one of the things about that is, and this is another negative part, is that if you would have been using the daily, you could have got in a little bit earlier. And that's it. That's the only difference. But you're still going to be on the right side of the market. And you're still going to make the money. So really, technically speaking, even though that is, I have to put that in the negative category, it's not really negative. Now, when you really get down to it. All right. Now, let's put into perspective and explain what we mean when we say consolidated market. How do you know, and what would you do? Well, when you get your reports, you're looking at that trend momentum column. Your trend momentum column is very easy to read, even though you do have a lot of data there. It's very simple. A reading of 1 in the trend momentum column simply means that you are in a bull market. It's just that simple. A reading of 3 would mean that you are in a bear market. It's just that simple. Any reading other than a 1 or a 3 in the trend momentum column is a sideways consolidated market. And there you go, in a nutshell. If you don't see a 1 or a 3, you're in a consolidated market environment for that day, so trade accordingly. All right. Can the market relock in after a day or 2 or 3 of being consolidated? Absolutely. Absolutely. All right. The only caveat here would be a reading of 88. If you see a reading of 88, then obviously you're in the Algo Kumo cloud of consolidation. That's the only difference, is that it's just letting you know what type of consolidation you're in. All right. So an 88 is the Kumo cloud consolidation. You're in the cloud. That is where you're living right now. A reading of 2 means that you are consolidating north of the Kumo cloud. All right. Bull market that's pulling back. A reading of 4 is consolidation below the Kumo cloud. Bear market that's pulling back. And there it is. That's it. Those are your trend momentum readings. That's it in a nutshell. All right. So now you know how to read those reports, because that's what it's going to look like for you. All right. And as far as the weekly and the daily buy triggers, they are what they are. If the daily and the weekly price triggers equal, meaning it's the same number, it's the same reading, that means that if those are triggered, you can expect a powerful move in that direction. All right. So if your weekly and daily buy triggers are the same, obviously, if that happens, then you can expect a very powerful breakout. Likewise, if the daily and weekly price triggers are the same on the sell side, you can expect a powerful sell-off in that direction. And that's just it. That's it in a nutshell, man. It's really not complicated. All the complexity has been programmed into the algos themselves. Thousands of lines of code, pretty much just about every market condition or situation you can think of is programmed in there, even down to where to put the stops. The system will calculate and let you know where those intraday price inflection points are and where the large institutions are hiding their money, hiding their stops. All right, seeks all that out and breaks it down to you in a readable, simple format. All right, 1 page, that's it. Takes you maybe 5-10 minutes tops out of your day to read it and make a decision and place your trades. It's just that simple. Not very difficult, because the environment that we are in and the season that we're about to enter into, you're going to need to be a lot more nimble. You're going to need to make decisions a lot quicker, because things are going to be happening so rapidly and so fast. Data is going to be coming out, and there's going to be a lot of chatter, a lot of clamor about what's happening and what to do. All right. So this is why I'm doing this video today, to explain to you the environments that we are finding ourselves in, and as a PulseWaver, how you can take advantage of those situations and make your trading a lot smoother. All right. All the complexity has been taken out. I've done all the hard work. I've done all the labor and the suffering for you, so you don't have to. And that's pretty much it. So back to the crypto situation. Coming into today, if you look at your reports, if you look under DEX's watch list on the dashboard, under the Bitcoin reading for the day, you'll notice that we had a rally alert today, and that so far has not manifested itself. We've got no upside production on that. But you'll look at the trend momentum reading, and you have a reading of 2, which lets you know that we are technically in a consolidated environment. All right. We're in a pullback. All right. It's an official correction. All right. Consolidated market, official correction. So you must trade accordingly. All right. Next, take a look at DOT. You'll notice on the report that it also has the same reading as the Bitcoin as far as the trend momentum reading. It has a reading of 2 as well. So we're consolidating north side of the Kumo cloud. We're in a confirmed corrective mode. We're in a pullback corrective mode. All right. So then you trade accordingly with that. The only difference is today we had a rally alert for the Bitcoin, but we had a bearish continuation pattern for DOT. So those are only 2 differences between those 2 markets. Same trend momentum readings, however, but different points of view, different how they stack up on their individual charts. A little bit different. All right. So when you're just looking at your whatever exchange or broker you work with, and you're just looking at those charts, it can be extremely misleading because they're not using algos. I mean, the algorithm, whatever they're using it's not the PulseWave algorithm. So it may not look like it to you. It may look like something different. So you have to take all of that into perspective. And that's what we do. We take everything into its perspective before we make final decisions and things like that. That's just what we do. All right. So you can see that DOT has come down further and then quickly reversed. Now, DOT took out the pointer. Let me just show you what I'm talking about here, so you can see what I mean. Let's see. Where is it? Oh, here we go. All right. Let's make this chart bigger. All right. So here was the initial bearish pointer right here, right? All right. This is what we did on the 18th. Yesterday, the market looked like it was going to come down and do something, and it didn't, right? But then today, we spiked down and we take out the pointer. But look how the market has quickly reversed back up. Now, if we were to close here, this will be another pointer. So we'll be looking to go further south. Right now, the shape up of the market is showing that it's gunning for this one right here. This pointer from March the 24th. And that would take the market down pretty low. That would take the market down to the $27 handle and DOT. Just FYI, this is the shape of how things are shaping up right now. This is how it's looking. And then, of course, we got this one back here. Got this main pointer right here from February the 22nd. And that would take DOT down to the $23 handle. You see how this is moving? See how this works? So you can't ignore these pointers. These pointers are real. They're pretty serious. So what am I saying? Am I saying that the run is over? Short-term top is what I'm saying, but I don't think the run is nowhere near over. Yeah, you'll come down here and take these out, but then you can't ignore this pointer that was done here on April the 17th, where we hit the $48 handle. This bullish pointer cannot be ignored either. So here's what normally will take place when you have a chart with all these pointers on them, bearish and bullish. The market is letting you know that you have a possibility of a long-term, extremely wide trading range that could be on tap for this market. All right. So we're gonna chop it up and dissect it day by day, but we cannot ignore this bullish pointer here, nor can we ignore this bearish pointer here or this bearish pointer here. We cannot ignore these trading zones. All right, we can't. Excuse me. So this is where we are. All right. This is what I mean about switching up your approach based on prevailing market conditions and trends. All right, here's the XRP Ripple. Pull this one up. All right, so you can see here, this pointer done on the same day, April the 18th, right? You got down to the $1.12 handle. Right now we're sitting at $1.33. Yesterday, look, it was going to come down and take this out and challenge it. It did not. Today, you spiked down, but failed. This is a fail. So if we reverse and get bullish here, this bearish pointer will be successfully challenged, but it's just a failure. Didn't take it out. Does it mean you have to come back later and take it out? No. Market can do whatever it wants to do, but it doesn't have to now if we reverse and get bullish from here, because this came down and tested it and just couldn't get lower, couldn't take it out. Now I know what you're going to say. Well, what about the bearish pointer right here on March the 23rd? I'm sorry, February the 23rd. Well, we got down to 35 cents. Well, I have to tell you, you came and you did come down and try to test it and failed. Technically speaking, you can say test done. It failed, but it was done. It was attempted. Now you're out. Just like the one back here on January the 22nd. Got down to 23-cent handle. You eventually came down and tried to test and failed. All right. You can say that these are done. The market does not have to come down here. You can make that argument. Can the market come down there anyway? Yeah. Yeah. Can do whatever it wants to do. But I'm just saying, you got to understand the aspects of how other robots, other bots are going to be looking at the market, how they're going to be trading it and what they're looking at, because they're watching the order flow as well. And those robots will be triggered with certain aspects. So you can make an argument right now that someone's trying to put a stop to this and make this a failed test of this point, or this bearish pointer, so that we can get back up. We'll see. That's a tall order. That's a tall order. We'll see. I'm not so sure about that. I'm not so sure about that. We'll have to see. We'll have to see where the market closes. Now, from day to day, when I say the word close, I mean what the market looks like at 6 p.m. Eastern Standard New York time. Even though the crypto markets don't technically close the way they do their daily charts, though, yeah, that 5 p.m. to 6 p.m. window, that 1 hour window, is usually when, you know, you're changing from continent to continent, just like the futures markets and forex markets do. All right, U.S. stops trading. Everyone's going home for the days. You know, equity markets close at 4. So technically speaking, between that 5 to 6 p.m., I liken it more to the 6 p.m. That'll let us know where we are and what the market is preparing to do. All right. Just something to think about. Just something to think about moving forward. All right. So tonight, when we do the end of day report, we'll get a better idea, a better aspect of what's what. All right. All right. So that's all I got, man. That's all I got for now. That's all I got. Just wanted to point out a few things here as far as what's going on with the charts, what's going on with the markets. And with that being said, smash that like button for me. And remember, bulls make money, bears make money, and pigs get slaughtered. So remember to take what you can and give nothing back. And I'm out. Peace.